Welcome everyone to the Public Podcast. I'm your host, Anne Berry, and with us today is Shweta Khajuria, analyst at Evercore ISI, to break down for us all things online dating and what is going on specifically with Bumble and others in the landscape. Shweta, thank you so much for joining. Excited to hear your thoughts today.
Thanks for having me.
So Shweta, break this down for us. Bumble has just released its earnings. What went on? How did the company do across the top line, across EBITDA, and some of the other key metrics that you've been tracking?
Sure. So fundamentally, when we think about the business as a whole, they're executing fairly well. Now we look at three things. One is revenue that you mentioned, EBITDA, and the most important metric is the number of payers, which is how many payers they're adding on a quarter-over-quarter basis. And across the board, they beat expectations on revenue, on EBITDA, and on net additions for payers. On top of that, they reiterated their full year 2023 guidance, which they have been the first time they gave the guidance was in November of last year during their third quarter earnings call, and they've stuck with it, or in fact have made it better. So fundamentally, they reiterated the revenue and EBITDA margin guides at the midpoint for revenue, and they raised the net additions guide for the payers, meaning that they expect payers to be better for the full year now, given the strong first half already. So then the question, go ahead.
So Shweta, just to frame it for us, give us some of the numbers, give us a sense of the size of the revenue base and the size of some of that subscriber base. It's just great to set that stage for us so that we can
absolutely.
then talk about how that stacks up with some of the others.
Yeah, absolutely. So Bumble as a company is a $1 billion revenue run rate company. It consists of three apps. Bumble app, which is the yellow B app that,
Right.
Women Make the First Move that everybody knows. They also own an app which is European-based called Badoo. And then they own a small app called Fruits, and they most recently acquired another app as well. But for all intents and purposes, Bumble app is their signature app that drives most of their revenue, EBITDA, etc. Like that is the app that most investors care about. At a company level, they're at a $1 billion revenue run rate. Now, in terms of the total number of payers, they have about 2.5 million or so Bumble app payers. That's globally. Majority of them are still in the US, but they're expanding across several international markets. And that growth rate for Bumble payers alone is in the mid 20% growth range, which is very robust. Just for context, I mean, Tinder is now already slowing down and seeing negative net additions.
Got it.
So that's some context.
So Shweta, just if we take that number of Bumble subscribers in that 2 million plus range, how does that compare with Tinder? How many does Tinder have in the US?
Tinder has, US is about half of their business.
Right.
They have over 10 million or so in payers or subscribers. And
Right.
I would say that more than half, just because people in US pay a little bit more than those in maybe some European and Asian markets, majority of them are still in the US. I would say the difference is probably 6 to 7 million are still in the US versus call it 2.5 million total for Bumble app, and we think that about 70% of that is in the US.
So Shweta, you've just talked about for this Q2 earnings release, Bumble has outperformed.
Yes.
You just described across its financial metrics and also against its operating KPIs, and yet the stock is actually down sharply.
Exactly.
Following this report. So what's going on? What is it that retail investors or institutional investors are not appreciating, either about Bumble's core business or about some of the other apps that you described?
Yeah, absolutely. And that is the key question for the day. I mean, the fundamentals are holding up, yet the stock's not showing that. There are a couple of reasons. One is that part of it is an expectations correction because a lot of the investors are looking at 2024 already. For 2024, the estimates are calling for 18.5% revenue growth. Now, if they come in at high end of their guidance this year, that's a high bar. It leaves limited room for upside for next year. The second reason also is that generally speaking, this category is out of favor. So for the stock to have traded up today, it called for a meaningful beat and raise to show that Bumble can actually grow globally, not only in international markets, which brings me to my third point, that there is indication that from the fact that they lowered the high end of their guide, that most of their growth is coming in international markets, which begs the question, are they tapping out of the US market? And the US market is clearly slowing down for them, and it's now a question of converting more of the user base and gaining share versus secular growth. So those are the clear overhangs on Bumble. And in general, I would say online dating category is pretty much in the penalty box, because the key question for both Match and Bumble is if this category as a whole is well penetrated now with close to saturation, and where will the forward growth come from?
To that point, Shweta, just to go back in history a little bit, Bumble was one of the sort of the COVID IPO stories, right? And if you look I'm just looking at the numbers now, the 52-week high for Bumble was about $37. It was even higher at IPO and the IPO pop, trading now at
16
sort of $16, yeah, $15, $16 range. Does Bumble ever get back to where it first came out?
That'd be difficult. There are some differences between the environment now and the environment back then. If we look at why Bumble stock has underperformed year to date versus some of the other names in our coverage, most of the underperformance, I would say almost entirely, the underperformance is a multiple D-rating versus the estimates coming down. There are two reasons why stock would trade off or rally. Estimates go up and multiples re-rate. Those two are the clear reasons for rallying of a stock, and the opposite for pullback. Numbers haven't changed much, but it has primarily derated year to date, underperforming the rest of the internet universe and the market. And so why I think it most likely won't get back to that range is because it is very difficult for investors to pay those multiples. We are in a very different interest rate environment. The average multiples will not be the same as when Bumble was first going public. And we're also in 2.5 plus years into post-public debut of Bumble. We are looking at a more mature market, and their U.S. growth is slowing, which begs the question, should they get a premium multiple? So I would be very positively surprised if it ever gets back to above $50 range. My best guess is that this is range bound between here and $25.
Still a pretty big range. Still a pretty big range, Shweta.
Range.
That's a $10 range versus roughly where we are today. Let's talk about some of the fundamentals of the actual company, absent the rate environment and sort of taking it out a little bit of some of these macro forces. Expenses have raised a flag for Bumble Bears. Talk to us a little bit about Bumble's user acquisition costs, so to get to new folks on the platform, and how that compares with some of the Match Group assets, including Tinder and Hinge.
Absolutely. So fundamentally, marketing cost is the biggest cost for Bumble. Their EBITDA margins are around 26% range. When you compare that to Tinder, when you compare that to Match's EBITDA margins are in the mid 30% range. And if you just compare to Tinder's margins are above 40% EBITDA margin.
Right. Okay.
So it has always been the case. Now the question is, going forward, how do we think about it? Because historically Tinder had never invested in marketing, now they need growth. They're leaning more into marketing. It's becoming a more competitive environment. So Bumble is trying to do the same. That said, based on our conversations with the management team, they are managing the business such that they can at least drive 100 bips of margin expansion. That is not true for Match. They are at a place where they're leaning into marketing, and showing margin expansion at all is going to be a challenge starting next year. For Bumble, they benefit from brand resonance. So the organic growth with the brand name and loyalty is helping them tremendously while they lean into marketing spend, and they can expand their margins because that's how they're managing the business. So that's a fundamental difference. So that makes us question, where can margins go to at maturity from 26% today? Can they get to Match levels? And I think that they'll slightly under index Match.
Let's talk a little bit about pricing as well, Shweta, just to that point too, because that's another piece of the margin profile. You've got the costs on the one hand, you've got the revenue trajectory on the other. If we draw the analogy with streaming, right? Because I know Evercore ISI, you guys cover a lot of other media and entertainment assets. There is an argument, there's a limit to the number of platforms that our eyeballs can take, right? We're divided in our attention between social media, between streamers, those who haven't cut the cord, cable TV. how many dating apps can the average consumer really lend their eyeballs to? You know, is the average consumer using two? Are they using three? And how much are they willing to pay to have multiple, for multiple
But
platforms?
both great questions. So we've been doing surveys, consumer
Yeah,
surveys, for the past several once every 6 months for the past, call it, a couple years. So we have at least 4 surveys now, and
interesting.
we ask single folks who are actively looking for a relationship. That's our target audience, and based on that survey. And the audience has ranged anywhere between 500 to 1,000 people all over the US.
Hmm,
Typically, people use about 2 to 3 dating apps, and typically they pay for around 1 to 2 apps on
got
average.
it. Got it.
And in terms of their propensity to pay, generally speaking, it averages in the high teens dollar range, anywhere from 18 $19 per app. So that's where Tinder has ranged historically. Hinge and Bumble over index. They're typically $25 to $35 range on average.
And just in terms of that competitive landscape, Shweta, the marquee product of Bumble, to your point, is the women make the first
Mhm.
move, core dating product. Match Group, have they tried to replicate that strategy? I feel like we're living in the age of products being, if we look at Threads versus Twitter, the age of product replication where it seems to be successful. Has Match Group done something that replicates Bumble's core product, or are they planning to? What are you hearing in terms of product development?
Not so much as changing their value proposition or ethos around women making the first move. That would be very difficult to replicate at scale for Tinder, because Tinder
Mm,
has been around for much longer and people know
yep,
it for a different reason. But
yep.
in terms of pricing, in terms of product, in terms of features, there is a lot of overlap. The swipe experience, for example, the spotlight. It's basically a feature where you can put yourself up and center for people that you're interested in, and all of them offer that. While you're traveling, you can go into incognito mode. So there are tons of features that are absolutely overlapping, and that makes these apps a little bit more commoditized. So
Yeah.
the unique value proposition really is how you build. For Bumble, it's clearly women making the first move and how you can manage. For Tinder, beyond price, because it's cheap, still cheaper than most of the others, it's also the easier in onboarding. It's what it stands for, where it's less intentional dating, uh, targeted for maybe the younger cohort, versus Hinge and Bumble that is for an older cohort, more intentional. You have to kind of fill out a survey on Hinge that's more extensive, takes you 3 minutes, versus Tinder takes you 30 seconds to hop on. So those are the fundamental differences in terms of user experience.
Before we leave the dating product category and we talk about some of the other products Bumble's been touching, let's talk about AI in
Sure.
dating, Shweta. And I feel just as we've had in the last 24 hours reflections on Bumble's earnings, we've also seen a flurry of newspaper articles talking specifically about Tinder and the use of generative artificial intelligence in dating. What are you seeing as a trend in the application of AI in the dating space? And this can be not just Bumble, it can be across all of the different apps that you follow.
The number one application is safety, where
Interesting.
they are trying to make the profiling of your pictures, what
Yeah.
picture you want to show, but more importantly, trying to filter out those who are showing inappropriate pictures.
Mm.
Safety around messaging, safety around reaching out to people. So that entire topic of safety and privacy is being addressed
Hmm.
by AI, in terms of the pictures you show, but not showing inappropriate pictures. That's one. The second one, and that's very important for Bumble, especially because of the women making the first move, but now increasingly for Tinder because of the reputation that the app has gotten recently.
Interesting.
The second value proposition of AI is better matching, because ultimately the app is only as good as the quality of matches. So the number one lightning in the bottle is you have to have users on the platform. You have to have a critical mass number of men and women, if you're heterosexual, to actually make the app work. And once it works, the key thing is matching. So in order to improve the matching algorithms, they are leveraging AI to drive the best probability of match that they think their data shows for you based on what they know about you. And that's
Interesting.
the second probably most common use case. And that brings me to, just for you on Tinder. That's an example of better matching, showing you only 5 matches that they think are their top 5 matches for you versus 20. And the same thing for best bees for Bumble. It's the same idea.
Can you talk a little bit too on this topic of security, Shweta? Deep fakes, and talk to us about fake profiles and how that ties into how AI is or is not being used by these platforms at the moment to try to make sure that its legitimate users are not subject to being, approached or their time being wasted with bots, with fake profiles. What are you seeing there?
The dating category is interesting because ultimately you want to meet that person. And so that issue is a minority of them in terms of fake accounts, because it's unlike Twitter, excuse me, that you could have misinformation spread faster with just fake accounts. Versus with dating, you could have a fake account, but ultimately you have to meet that person. It kind of surfaces on its own because there's no person to be had. So those are minority. The bigger issue around safety for them is when you meet, they are the right person that you thought that they were, and that there is no safety issue in terms of the accuracy of their pictures, in terms of what they said, in terms of post meeting safety of especially a woman in a non-developed world. So those are the issues that they are tackling.
Let's talk about the non-dating products in the Bumble portfolio. Shweta, you've touched on them a little bit. There's Bumble for Friends, for example. What have the adoption rates been for the non-dating product suites?
Right now, they're seeing a very healthy engagement for Bumble for Friends, but it's also very new. So the base is very small. It's a brand new product. It's been around for about a couple months. But BFF just for context for people who may not know, it's as a separate standalone app. It's brand new. It's just a couple months. They have this feature called BFF within the Bumble app that's been around for now quite some time, and that the biggest overlap they were seeing was about a third of users were actually jumping onto the dating world when they were starting to get interested and coming back and wanting to just want friends. So there was definitely that overlap in engagement. More important piece of Bumble for Friends, however, that they are trying to figure out is how, beyond dating, how much that can expand their TAM, their market opportunity.
Right.
Because dating is, we think about, $10 billion market today, growing 10% over the next 3 to 5 years. And they are the second biggest player. Match and Bumble create the market. But what beyond that, once that category is penetrated, they need to lay the seeds today to drive that. And they have the matching algorithm, and that's what they're after. And it may take a few years before they scale with monetization, but that the TAM expansion is what they really want.
So let's just hone in on that for the last piece of this conversation, Shweta, which is you and your team, you do have a note out on there. You've got an outperform rating on Bumble. Target price is $27 in your report, which is, call it $10 north of where the business is trading right now. How much of that upside, how much of that target price to get there is dependent upon the expansion of the TAM through things like BFF, through the non-dating side of it? So just help us understand how much of the growth that you're anticipating is further penetration of the dating market versus this diversification.
Vast majority is online dating right now. We are not accounting much and it doesn't take much to get to $27, excuse me, because the valuation is so attractive. It's trading at 10, 11 times. You put in even a 15 times multiple, which is market multiple, and you're getting close to that. So it's not very aggressive in terms of getting there in the next year or two. The key question for the valuation and the intrinsic value is, can the dating app actually grow in the double-digit growth rate while showing margin expansion in the near to midterm? If that is true, the stock should work.
And related to that, Shweta, last question on the intrinsic value, cash flow generation. What is the standard to which you're holding Bumble for cash flow generation?
Well, the difference between Bumble and Match is that the quality of free cash flow for Match is arguably higher than for Bumble, and the key reason is SBC compensation, which is the stock-based comp. And because Bumble is a fairly new company, they have a higher concentration of SBC versus Match, and as a result, lower quality of free cash flow. Having said that, they have very healthy free cash flow, around, call it 100 to 200 million of free cash flow, which is 20% margin, and free cash flow to EBITDA is about 50 to 70% conversion, which is attractive.
Yep. Got it. Well, in this age where it feels like the paradigm has shifted, certainly since the IPO from growth alone to cash flow generation, it's always great to get the expert perspective on what that profile looks like. Shweta Khajuria, analyst at Evercore ISI, thank you so much for joining us today with your perspectives on Bumble. Come back. Loved hearing what you have to say, particularly as you do these surveys and you see adoption and you see where the consumer is paying attention to some of these product features. We'd love to hear your perspective.
Thanks, Anne. It was great being here. Thanks a ton.
Thank you.